guys, welcome to Unison's weekly fundamental analysis. So first of all, let's look at the euro. So vaccination speed up in Europe in the second quarter. The euro closed up 2.46% against the dollar this month to 1.2019, a new high since February 26 to 1.2150. The European Central Bank decided this month to keep the three major interest rates and bond purchase plans unchanged, and pointed out that the medium-term economic outlook is more optimistic. The European Central Bank said that the recent medium-term risks surrounding economic growth prospects have become more balanced, and the Eurozone economy is expected to rebound strongly this year. The supply of vaccine in the Eurozone will triple this quarter. Although disappointment over travel restrictions has risen, the expected improvement in immunizations and preliminary results of vaccine competitions have pushed the euro higher. So the UBS analysts predict that 70% of the euro population will be vaccinated by December. The euro has overcome many obstacles, including the delay in delivery of AstraZeneca vaccine, and some vaccines have caused health problems such as blood clots. Vaccination in the European Union stagnated in the first quarter, lagging behind the UK and the US. And due to the resurgence of the epidemic, stricter lockdown measures were once again implemented. So next, let's look at the pound. Compared with the euro, the exchange rate of the pound against the dollar rose insignificantly. In the end, it only closed up by 0.26% to 1.3817, although the intraday hit a new high since 4th of March to 1.4009. It failed to finally stabilize above the 1.4 mark for the third consecutive month. The British factory ushered in a large wave of orders in March and is preparing for the gradual restart of the economy from the epidemic prevention shutdown. The pace of recruiting employees is fastest since 2014. The survey shows that the British people's views on the government's response on the COVID-19 crisis have turned positive, and companies have become more optimistic. Furthermore, the UK's new vaccination schedule has outperformed other countries. The UK is currently lifting the third round of national blockade measures and preparing for the second phase of unblocking. British retailers this month reported the biggest improvement in sales since 2018. Non-essential stores began to reopen after being closed for several months. With the relaxation of the COVID-19 restrictions, signs of an economic rebound have intensified. Coming up next, let's look at the yen. So the yen gave out more than half of its gains. So the US dollar against the yen hit a new low of 107.469 since the 4th of March. But in the end, it covered more than half of the decline and closed 1.25% lower to 109.326. Japan's economic recovery was hindered by the recent surge in COVID-19 cases. So for the third time, Japan declared a state of emergency in Tokyo, Osaka, and other two places to curb the spread of the epidemic. This cast a shadow over the fragile economic recovery and the outlook for the yen. So the Bank of Japan maintained its large-scale stimulus plan and expects that the inflation rate will not reach the 2% target in the next few years. So as the newly introduced restrictions in response to the surge in COVID-19 cases overwhelm the growth momentum brought about by the strong global demand. So lastly, let's look at the Canadian dollar. The US dollar closed down against the Canadian dollar for the third consecutive month, and the decline further expanded, closing down 2.15% to 1.2291 at the end of the day, and hitting a new low of 1.2263 since the 2nd of Feb 2018. In stark contrast to the Federal Reserve's dovish stance, the Bank of Canada has begun to scale back asset purchases. The increase in oil prices to 6-week highs and the increase in timber prices have also brought additional support to the Canadian dollar, which is related to the commodities. Moreover, the Bank of Canada's decisions to lower the weekly Treasury bond purchase from the current 4 billion Canadian dollars to 3 billion Canadian dollars, indicating that the bank is eager to quickly start the normalization process that may take several years to complete. It is also the biggest step forward in the withdrawal of stimulus policies among the central banks of major developed countries. And coming up next is the forex calendar for next week. So we have to take note for the NFP as well. That is the first week of the first month. Okay, so that's all for today. Thanks for watching.